Resale prices and rentals for private homes continued to weaken in December last year, and that's according to data compiled from real estate agencies in Singapore. Still, most market experts don't expect a sharp drop in resale prices going forward. More from Linda Hong.
Latest data from the Singapore Real Estate Exchange, or SRX, shows prices of resale private homes weakened by a further 0.2%, the fourth straight month of decline in December. The city area saw the steepest decline in prices at 2.3%, followed by the suburbs at 1% lower. But resale prices of private homes in the city fringes are still holding up, climbing 2.9% last month. Some analysts expect loan curbs and cooling measures to continue to work its way on the market, forecasting overall private property prices to decline by another 6 to 10% this year. But some analysts say the decline in private home prices may be capped going forward. With newer properties coming into the market, resale prices may only see a 2 to 3% decline this year.
When you have more new projects in the market, all these stocks are new and usually they can demand for higher prices. So that will support the price level of resale market.
New supply of private condominiums would, however, add downward pressure on the rental market.
In the last few months or a quarter or two, the foreigners in expatriate market has definitely dropped slightly. We are not seeing that many expats in Singapore right now for the new jobs. The next 1 or 2 quarters, there will still be a decline in terms of price as well as the volume.
Rentals of private condominiums slipped 1.3% in December, marking the 5th straight monthly fall for the sector. All 3 regions registered lower rentals, with rental prices in the city falling the most by 1.8%.
And for more on those SRX figures on private home resale prices and rentals, I spoke to Getty Goh, he's director at Ascendant Assets, and I began by asking him about the 4th straight monthly drop in the overall resale price index.
This just goes to show that TDSR is taking effect, and I think it coincides with the seasonal quiet month because typically within a year, buyers and sellers take like November, December off because people are away for holidays. So I think it coincides with the seasonally quiet month as well as TDSR taking effect. That's why we are seeing consecutively 4 months downward trend.
There was a price increase, though, in the rest of Central region, which bucked the overall trend by seeing an increase of 2.9%. I mean, what are buyers and developers seeing in this particular region?
I think the rest of Central region typically is where most people would have access to. What do I mean by that? Let's say if someone who used to stay in a CCR, core Central region, and is thinking of downgrading, RCR would definitely be somewhere that he's looking at. Conversely, when someone from the outside Central region is thinking of upgrading into somewhere more premium, they will also look at RCR, which is the rest of Central region. Hence, the catchment of people who can consider buying a property in RCR, they appeal to a larger pool of potential buyers. That's why we see this buckling of trend, and it doesn't really come as a surprise.
Rental prices for private property, they declined as well by about 1.3% in December. I mean, that of course reflects a sustained weakening of rents for the 5th consecutive month now. I mean, are current tenants perhaps tempted by the drop in rental to continue renting their flats instead of upgrading to buying homes?
I would say definitely, because if we take things in a larger perspective, there are a lot of people right now having problems securing financing because of the TDSR measure. So as a result, and of course, as a result, a lot of them may not have the financial means to buy as compared to in the past. So that's one group of people. Now, the other group of people are those even though they have the financial means, because right now rental rates are going down, they want to take advantage of it and they really want to max out and see the downward trend run its course before jumping onto the bandwagon and before getting a property.
We look at these numbers almost month to month. I mean, but there's some anticipation that overall private property prices might further moderate by up to 10% this year. What's your take?
Well, I would say that's a reasonable forecast. However, I think forecasting in the next 6 to 12 months is akin to looking into a crystal ball, because there are a lot of things that can happen within the next 6 months to a year. One case in point would be if, let's say, the government tomorrow were to reduce or repeal some of these measures. Who knows what could happen to the market? But ceteris paribus, all things being equal, we do expect prices to come down between 5 to 10%.